Good morning, everyone. The U.S. yesterday unveiled more sanctions against Russian individuals linked to President Putin's inner circle, but the sanctions clearly sent a different message than intended, as the Russian ruble rallied and Russian stocks were the best performing major market in the world yesterday. Gold, on the other hand, fell. It's clear that from the sanctions that the U.S. wants to limit the impact on U.S. and European businesses. It seems to me that Russia is more at stake here, and so is probably willing to keep it going for longer than the West is. I expect the conflict to drag on. Eventually, I think it will impact the financial markets more, but how long it'll take before it reaches that point is anyone's guess. The FX market performance yesterday was mixed and didn't conform to the usual risk-on, risk-off model. The Australian dollar was hit by news that the China Banking Regulatory Commission has asked banks to report their exposure against iron ore import financing. That sent iron ore prices lower. This is potentially bearish news for a number of commodities, and therefore the Australian dollar, if the Chinese government starts to crack down on China commodity financing deals. The fall in New Zealand dollar was harder to explain. The New Zealand trade figures for March came out quite in line with expectations. I think this is just a bout of profit-taking after the recent RBNZ meeting, and I expect the New Zealand dollar to outperform the Australian dollar going forward, for Aussie Kiwi to head lower still. The main feature today will be the preliminary German CPI for April. It's forecast to have accelerated to 1.4% year-on-year from 1.0. A rebound like that would be a relief for the ECB ahead of the euro area preliminary inflation data coming out tomorrow and the ECB meeting next week, and should set the tone for Eurodollar today. In the UK, the nation's preliminary GDP for the first quarter is estimated to have risen 0.9% on a quarterly basis. That's an acceleration from the fourth quarter. Such a solid growth figure would be a reason for the pound to regain some of the momentum that it's lost recently. In the U.S., the S&P Case-Shiller Home Price Index and Conference Board Consumer Confidence for April probably won't have that much impact on the dollar. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Giller, Global Head of FX Strategy at IronFX Global, wishing you solid trading.